Good afternoon, traders. This is Christian from Stock Market Trade Group, and this is your end of day market recap for Thursday, December 9th. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Risk disclaimer is right here. If the video is a little bit blurry, it's just because YouTube takes a little while to render the high definition version of the video. So more volatility, a decent jump in the VIX today, up 8%. Here is the VIX. S&P kind of held its own till about the end of the day. Was only down about 20 or 30 basis points for the majority of the session, but really kind of spilled over where there was just other areas of weakness that were kind of leaning on it. Specifically, small caps. Big move down today, down 2.2%. Again, the difference between those small caps and large caps, again, just a major difference. Qs also was not a day for growth today. Yesterday was. We mentioned in yesterday's video that ARK has had a nice bounce from those lows, particularly that area of growth specifically, but other areas too. When we jump into the S&P chart, the one thing to kind of note is that we touched that top of value yesterday. We've been moving quite nicely through some areas that I've kind of highlighted through the week. We got through. We made it through the value. We started this week inside the value area. We came back and retested. The next area that I thought might be an area of consolidation was that top of value. We did just a little bit of that, and we made it through there. Next area, I thought that the 1 hour VPOC would also be a place of pause, and it kind of was. We got a little bit above it, but that's why we use multiple time frames just to see where there is some resistance, and that came right at the top of value for the December value area. Again, I get questions about this on Twitter quite frequently, but this value area, right? This value area does not change. This is for the whole month of December, and it's based on last month's volume at price, right? So here's the market profile, right? And what we're doing is we're taking a statistical significant view of that market profile, and we're drawing top of value as well as bottom of value, and it really does, it comes into play a lot for names, especially what helps is when we're kind of, when we start a period below value. Notice that we had no problem getting through the bottom of value, but it seems like the top of value was kind of the place. Now, we're just basically sitting back in this range, so I don't know if you could really draw a major conclusion, from this other than, we're just back in the range of where we were for most of November, which is not surprising to me. I didn't think that, optimistic, but I didn't think that we were going to get through the top of value that easily, especially with a number of things kind of hanging over the market, right? These are the things that worry people. The CPI report tomorrow. Next week is a big week. Next week is a huge week. We have a Fed meeting, right? It's been nice this week because the Fed's been in a quiet period, so they've got a nice zipper on their mouth this week. But next week we've got a Fed meeting, and we have quadruple witching next week. So I think some of that is kind of spilling over. Basically, what happens with quadruple witching is, one of the biggest witches out of the bunch is index rebalancing. It's one that a lot of people don't talk about because they don't fully understand it, to be honest. But all of the S&P and NASDAQ indices rebalance, right? So it's not the one-off rebalance where they kick out a name and they bring in a name. They rebalance the whole index back to market weight. The best way that I could describe this is this also happens in some of the sector ETFs. The one that I always like to bring up is XBI, because the biotechs move around a lot. But when you look at these sector ETFs, right? So this is the biotech one, but there's one for the home builders. There's one for various different groups. It's equally weighted. What's the variable that floats around between every one of these quarterly rebalances, right? And the quarterly rebalances occur March, June, September, and December, right? So the next one won't be until March. But the variable that floats around between each one of these quarterly rebalances is price. So if it's an equally weighted ETF, right, it can't stay equally weighted unless you rebalance it every day. That doesn't occur. They only rebalance it once a quarter. So some of these names get bigger and bigger in the index if they rally more. Right. So, for example, the CCXI, DRNA, they're the largest weights, most likely because they've outperformed. And some of the names that have really underperformed are become lower weights, right? So nothing changes until you have these rebalances. The other one that I was going to look at is XRT, right? And if you look at the biggest weights in this one, it's Dollar Tree. Why is Dollar Tree the biggest weight? Because it's rallied the most, right? Dillard's is another one that's had good outperformance. Macy's, Boot Barn, right? So what will happen is they need to flip this. Now, what happens is you for the trading that will go on a week from tomorrow will be all tied to the close, right? And what will happen is the names that have outperformed, as long as there's more long assets that are tracking it. Remember, a lot of these ETFs have a quite a bit of short interest to them too. So as long as there's more long assets, what happens is the outperformers have to get sold, and the underperformers have to get bought. Okay, so that's going to create a lot of volatility. And what happens is everybody will knows this happens in terms of the big investment banks. Every investment bank has a portfolio trading desk whose job is to kind of go through the numbers to see what names will have to be bought and what names will have to be sold. Keep in mind, for example, Dollar Tree, right? I'm just talking about one index. Well, there's a lot of indices out there. So Dollar Tree could be in 20 other indices. So you have to net all the numbers to figure out what's going to happen there. So why am I going into detail about this? Because I know a lot of people don't know about it, and they're going to wonder. They're going to say, hey, why is this name up so much? Or why is this name down so much? Now, again, all of this is tied to next Friday's close. However, the investment banks pre-position in this, right? If you know a big trade is going to happen on a day ahead of Friday, you're going to basically put on, some of these institutions will put on trades ahead of this, right? Now, officially, the results get posted to the S&P and NASDAQ websites after the close on Friday. You have to subscribe to that data, and it costs a decent amount to get the data. But that will all happen. So I'm just kind of going over that. This is just one of the things. Of course, we also have monthly option expiration. We also have the index roll, the index futures roll, right? So all of the index futures will go away for December, right? So if you're trading like E-minis or the full contract, they will be rolling that contract, and some of that is going on right now as we speak, for out of December, and the new month will be March, right? Again, these types of things happen every quarter, but the December one, there's also some other rebalances out there. So it's going to be a volatile week next week, especially, for single stocks as well as for the indices too. So keep that in mind. And I want to talk more about today's price action. I think that there is just a little bit of a risk-off mentality. People are really worried about this inflation number, and institutions don't want exposure, I think, to some of these high areas of the market. Now, I think we saw just a little bit of an explanation, or my guess, in terms of what we saw this week so far. It's probably a little bit of buy the dip mentality as well as short covering. I think some of these smart money funds, or that money gets thrown around left and right. I still don't know who's the smart money and who's the dumb money, but it seems like the speculators on the institution side often get the market direction wrong. So they put on bets, and then they have to end up covering the bets when they're wrong. And that's why, if you look at, I think, and I'm not being mean to hedge funds, but I think it's like one of the worst years that they've had in the history of hedge funds this year. So it's been a particularly difficult and tricky year for institutions, right, and for retail traders too. This has not been an easy year. This has been a year, this market price action today, just kind of, is one of the reasons why I've been very disciplined in my trading and have gotten and have learned that over years. It's taken me to kind of realize how disciplined I need to be. I trade less and less. I used to swing trade options all the time. I do that a bit less because if you get you got to get two things right when you trade options, right? And that's hard in this market. It's hard enough to get one thing right, but two things right. You've got to get the direction right, and you've got to get the timing right. So it's I trade less and less options in this environment. I do take shots at things using options, right? That's what they're for, is to speculate a little bit, right? So I do that, but I dial down my exposure. I felt like I missed some moves the last couple days. There was a lot of victory laps, it seemed, on Twitter last night. That's also a great gauge of sentiment. When everybody's patting themselves on the back and doing the victory laps, that's usually the time to be taking profits, to be maybe hedging a little bit too. It's just the way it works, right? With complacency, and Twitter's a great gauge of sentiment for that. So what underperformed, right? Well, blockchain stocks got hit pretty hard. Just a lot of high beta. So much for that bounce in biotech this week. That was down 4.2%. So again, we've talked about this before, and unfortunately, some of these areas of the market have gone from uptrends to downtrends, right? And bounces and downtrends can happen all the time. But in my opinion, you have to stick with the prevailing trend, right? And this trend right now, unfortunately for biotech, is down, right? As well as a lot of other stocks too. Right? If you want to look at the ARK ETF. So again, sorry to be kind of negative, but you kind of have to go over the price action, right? This was a very oversold bounce that we've seen in the ARK funds, right? And notice it did not even get to the bottom of value and started to turn away. Now, is it over for any of these things that I'm talking about? No, one day is not a trend, right? And so this moved down 5.3%, which takes out two of the previous days' price action. Is a nasty day, and I would look at things. If you don't have the value areas on your screen, if you're not a member of Tribeca Trade Group, then the moving averages really help. All right. Just turning back to the S&P, I just wanted to mention one more thing with the S&P chart is that some people have talked about. I've got the RSI on my screen, right? So this is a study down here. People noted that when this returned to the highs, right, notice there's a divergence going on here, right? We did not get overbought, right? This should be a bit more extreme. You actually want to see that RSI confirm what's going on in the trend. And when this doesn't happen, when this doesn't get to the same kind of overbought level, it's called a divergence. Now, we've seen it before where sometimes these divergences don't matter that much. Sometimes they do. So you just kind of have to take note of these things and, really trade responsibly, right? In my opinion. Okay. All right. So that's that. NASDAQ also got to a similar level yesterday, top of value. That's same thing with the S&P, right? So that's moved down. Small caps are, got to the 200-day moving average and got rejected. They did not get up to the bottom of value, but very, very difficult to trade this other than fading big moves right now in the small caps. So what did outperform? This is something that I've been talking about quite a bit is the lower volatility areas of the market, right? Even with the growth bounce that we saw the last couple days, the more defensive names have continued to act very, very well. We've seen a lot of false moves on the growth side. Not every name, the semiconductors, the home builders, select areas of growth have done very well. Apple's done very well. But, what seems to be just having no issues with breaking out is a lot of the defensives. Look at Procter & Gamble over the last week. Right, and if there's another name that I was watching too, Church & Dwight is another name. But I run a screener at I look at new highs just about every day, a new high list. I also have a proprietary screener that I run that's based on names that, and this was yesterday's results, right? So I didn't rerun this, but look at how many names, right? And this is names that are above value on multiple time frames, and look at the majority of the names. Now again, we do have some criterion here. I don't look at names that are really extended above the value area, but look at what came up yesterday. A few consumer discretionary names. Most of those are home builders, but you've got staples, healthcare. You got one tech name in there, but you got utilities and REITs, right? So that just kind of tells you that even on the days I was talking about this a little bit earlier in the room, when it's not a stock's particular day because of a rotation, what you want to see is the name kind of digest and maybe even if the market is up, it goes down just a little bit, just to kind of cool off. You don't want to see a name collapse if it's not the stock's day. So I was talking about this in the midday video. I was talking about how Unity Software, for example, which is a name that a lot of people like. I do too. I don't have a position in it now. I was long going into the week, and I took it off for profits. Not huge profits, but I played the bounce a little bit, and I took this thing off, and look at it today, down 9%, and even today there was more of a spill towards the end of the day, but this was early in the day. This thing was already down 7%. So that's not, in my opinion, what you want to see. You don't want to see a couple small green candles after a big move down like this, and then as soon as it gets into a little bit of resistance, it gets squashed again. So that tells me a lot of these names, they need more time to kind of heal themselves, right? We were talking about PayPal and Square yesterday. I mentioned how I didn't trade those names. Why didn't I trade those names? Because I'm afraid that they're just going to go right back down, right? So we mentioned yesterday was a good day to kind of day trade some of these things. I traded Net. What did that name do today, right? Look at it. Disgusting. Down 6%. So I've been very careful this week playing the bounce, and maybe I didn't get as much out of this bounce this week as I should have, because I just had a hunch that some of these names they're gonna go back to where they were, or they're just not out of the woods yet completely. So I mean that's a nasty looking candle for. Right, and we could go across and we could look at some other, growth names too. Roadblocks, right, which is a name that I actually left on a small position. Right, I decided to leave this one on a little bit. I think that this one is, I looked at it midday and I said, well, it could be an inside candle, and I was actually thinking about adding to it. I did not add to it. I wanted to see it stay above 117. For now, I just kept my residual position on, and we'll go from there. I wanted to talk about the VIX for a minute. All right, so let's look at the VIX. So even though it was a big day, big move up for the VIX, up 8%, right around 2150. Notice that it's just an inside day. I always look at when I classify inside days, I look at the body of the candle, right, and make sure it's inside the previous one. So I'm not that worried about the overall market. I am worried about certain areas of the market, high growth, there's issues with. But there's right now, you look at what the home builders are doing, you look at what the semis are doing. Broadcom reported earnings after the close. They're up around the highs. Look at them go, 622. Right? So for now, this market is trying to shake off this weakness, and there was a word that I heard yesterday that I liked, and I think it was Liz Ann Saunders who said this. In the S&P, the market's been very resilient. Right, and I think that it's been more resilient than anything else. I agree with that. Do I think that there's some problems when you look under the hood of these indices? Yes, I do. But I think that there's other areas that, for whatever reason, FinTwit likes to ignore. Right? Nobody wants to look at healthcare stocks. Right? They don't want to look at, I understand, and the word that I used in the midday video was sexy. These names are not sexy, right? But you have to understand, do you want to make money or do you want to own sexy stocks, right? Look at AbbVie, for example, today, right? This is a beautiful name. And again, what's nice about this, if you are trafficking in options, these options are not expensive. They're not the same as a Unity software or an NVIDIA or a Tesla. They're much cheaper to trade. Look at the implied volatility of AbbVie versus any of those names that I mentioned. So you could really make some nice money when these names move like this. Right? There is money to be made in the low volatility names because when they move normal, like bigger than their normal ATR, their average true range, you could really clean up in some of those options when they move, when the stock moves more than it normally does. And right now, you could see, you have a little bit of a risk off. Like healthcare is almost breaking out. Right, it's got to get above 134.30. Remember, big difference between this and biotech right now. Right, healthcare is doing has had a very good couple of weeks. You look at United Health Group breaking out to new highs, right, up $4 today. Again, there is, so you have to kind of look at it both ways. You can't just, I see a lot of crying on Twitter. Oh my God, it's the big companies, they're holding up the indices, right? And oh, there's such devastation under the hood of these indices, right? Well, you got to take the good with the bad. There's obviously, it's not, now, the big names will distort things. When Apple goes up as much as it does, it's going to distort the overall index, right? But you have to look at some of these other names too. You have to say, again, people are biased because they don't want to trade United Healthcare. But United Healthcare has gone up from 460, has gone up, $13, which again, you can make a decent amount of money in these options. So take a look. Go through what I suggest, and as I mentioned, I do several times a week, is I go through the new high list. You're going to and go through the new high list and look at charts. You're going to find some names. I traded today. I'll show you Trade Blotter what I did. I tried that tact a little bit today. That was my plan. I tried a couple other things too. This Asan, all with tight stops, right? Asan CEO bought some shares, right? Is buying their own company shares, but that didn't work, right? So I took that off. I had one target in the beginning of the day, and then took that name off. Abbott is a name that, for example, right? I like this breakout, low volume. Well, not that low volume comparatively to today, but that's fine, right? You want to see a little bit of consolidation sometimes after a name has three big green bars. Like I said, you don't want to see it break all the way down, right? I also tried Dell, which fell back a little bit too far, so this is not a good example, right? I don't want to see this go down over 1%. However, it's going to be coming upon some support. I left this trade on for the day just because the market just was very weak at the end of the day. And we'll see. We'll see if this one can kind of make the turn here. If not, it'll be a goner. But you got to give the trades a chance to work too. At the same point, I tried some FND. This is a name that I've been watching. Where did this thing close? Yeah, it's a good thing I dumped that one. Again, I was looking for the turn, thinking that the home builders are so strong. I've been looking for different trades in home improvement type stocks, not just the home builders. I do still have some Lennar on as well, but this didn't work, right? I always say I have ideas, right? But I let the price action dictate whether my ideas will be right or wrong. Notice what I did here too, right? So I've talked about the defensives. I got involved in some just as kind of a place. I've got a big cash balance right now, so I put some to work here in just a low volatility equities. Names like I just mentioned, Procter and Gamble, Pepsi. Coca-Cola might be in here as well. Again, look at the little consolidation up here. So if I have to be in something that outperforms and goes up a little bit less than some of these other areas of the if the market is falling, so be it. Or if the market's going sideways, you got to be my opinion, have to be really strategic right now with this market. Made some money in Lulu here after hours. I didn't understand why they were getting hit so much, other than it's just a bad day for growth. It looks like this VPOC was taken out. I bought some at 400. Wow, it's actually selling off again. So maybe I try that trade again. But I sold some. I didn't get the high here. I was happy to sell about $10 over what I paid for Lulu. So again. just have to take what you can get right now with this market and not get super greedy. It's just a different market for now, right? And with all of those things that I mentioned, you got to get through these events. CPI report tomorrow, right? Everybody's looking at this report tomorrow, and then of course we've got a Fed meeting next week, and you've got a big bunch of rebalancing going on as well. So there will be opportunities, no doubt, but you have to be, again, I don't want to say I and how I trade is just being disciplined to be able to kind of make it through where the volatility right now is staying above 20 in terms of the VIX. Right, when it goes back below 20, it's a different story. But right now we're still in a heightened volatility area. All right, guys, thanks for watching. Have a great night. See you tomorrow.